before, haven't you? I hope. How many of you went out and found way down here under the practice stems? Man, there's a lot of videos out there, aren't there? And I put in a bunch of them before we started, and then we're adding 2 every day. Wow. So, almost away. Under the sample tests and quizzes, there's a cash flow problems and solutions. You guys see that? How many of you copied it? Made a copy? No, not yet. You want to do this, okay? These 2 problems, I gave you 2 of them, and I gave you the answers on them. These problems are very, very similar to what I'll have you do on the test, or the quiz test and final, okay? I don't know, what the quiz is 30 points, I guess 30 points, and then probably 20, 25 on the test, and then probably that much again on the final, okay? We're knowing how to do 1 problem. The problem is doing the cash flow statement. We're going to use the indirect method. What did it say in the chapter? What percent of companies use the indirect method? 99%? Yes, like that's 98, 99%, 97%, somewhere in there. Use the indirect. And they all say, well, the indirect is easier. It's not really. We have computers and stuff. You program a computer to do this statement anyway. So you can keep track of anything you want. When we used to do it by hand, it would have been more of a pain. Really, there's a little tiny bit more information, not a lot. I don't think there's a lot of information in this statement in general. We'll see why it is as we go through this. I think it's the weakest of all the statements. But the reason they don't like to show the direct method is there's a little more information there. Why would companies not want to give more information to their stockholders? I actually don't mind giving more information to their stockholders. They don't want to give it to their competitors. They don't want to give it to the government, right? So that sort of thing. Somebody's going to do a hostile takeover of their company or something like that. So anyway, so you don't have to do it, so they don't. And so we end up with an indirect method being used far more often. So anyway, this statement is really, really simple. It looks complex when you read the chapter. It looks like a real pain. It is a little bit when you start doing it. But once you realize what you're doing, once you figure out what you're trying to do, it's really quite simple. Why do people like the cash flow statement? You know who the people are that really love this statement? People who don't know about accounting. How many people don't know what cash is? Everybody does. They know what cash in means, they know what cash out means. You know what? I can easily find out how much cash I started with every year. Figure out how much cash goes into my bank account every year. You know what the balance was at the beginning, what all my deposits were for the year, and what all my withdrawals were for the year, and therefore how much I have at the end. That's all this statement's going to do for a company. How valuable is that? Can I predict what's going to happen next year? Not really. What I'd use to predict what's going to happen with the cash flows next year is my income statement. Because it's got the accruals and deferrals in it. Because it's dictated by what generally accepted accounting principles are. There are no generally accepted accounting principles really for cash. It's just cash in and cash out. I can have more cash by doing a whole number of things. I could sell assets that I really need for running my business. I could sell them and get cash for them and have more cash. I could borrow money and have more cash. Do either one of those things make a company healthier? No, you just have more cash. Oh, if my company's growing really, really fast though, right? I might have less cash because I have more accounts receivable, more inventory. That's a bad thing if it's growing really fast, right? Well, it's a bad thing if you run out of cash. I'm not saying you shouldn't manage cash. You should manage cash. But I really don't care how much cash I have. Sometimes every once in a while, my wife will ask me to go to the cash machine and get money out. Usually she does that, right? But I'll go to the cash. She's at the mall all the time and stuff. Anyway, and she does all that stuff. So, I'll stop by the cash machine at Oregon Hall. Then I'll get money out of it. And sometimes it'll say we have $5,000 in our checking account. And I'll call her up. Sometimes I used to, I don't do that anymore. But when I see her, I still do it, just teasing her. How come we have $5,000 in our checking account? What are you doing? Where should the $5,000 be? In investments, of course, right? Where they're earning a profit for you. They should be sitting in your checking account. And then she'll point out to me the obvious. I wrote a whole bunch of checks. They haven't cleared the bank yet. There's really only $5 in the bank account, or $100 or whatever, right? We don't keep any money in our checking account. What for? They don't pay us to keep it there. Why would we let them use our money interest-free? So with companies, it's sort of the same thing. You don't really want to have cash, but you want to make sure you don't run out of cash. Does that make sense? You manage the cash, right? What I really care about, let me tell you this little story. When I first went to work at Ostrom Mushroom Farms, I was 23 years old, I think. Yeah, something like that. Been out of school for 2 years. And so I went to work at Ostrom's. And the president of the company says, Keith, I would like you to tell me what the balance is in our bank accounts, all of them. We had 5 accounts or something for different purposes. And I'd like to give you the balance every day in the bank account. So I'm doing this, right? I made a little sheet, and I wrote down all the names of the bank accounts and I wrote the dollar amount in, right? And every day I'd write this down, and I'm thinking, why does this man want this? So then what started happening was they had a fair amount of cash in some of these accounts, and I got rid of it. And he's like, oh my gosh, Keith, we don't have any cash. What are you doing? Well, I got rid of it on purpose, Bill. What do you mean you got rid of it on purpose? Well, we were paying 12% interest to the bank on a line of credit, right? Note payable, open line of credit. If you have $100,000 sitting in a checking account, and that means you have $100,000 more borrowed at 12%, what does that $100,000 cost you every year? $12,000 thrown away profit. And he says, well, that's $1,000 every month that we increased our income by making cash zero and reducing the line of credit. You know how a line of credit works? In those days, you'd call up the bank and say, we should put more money in our cash account. Now, you wire it in. It's automatic. I'm not kidding. What I would worry about is how much is left on the operating line. At that time, it was a couple $1 billion, right? And they borrowed about $1.5 million of it. So how much cash did they really have available? It's a $2 million operating line, right? Line of credit. They have $1.5 million borrowed. How much cash do they have available? $500,000, right? They'd have to borrow it, but they could get $500,000. So if you kept $100,000 in the bank account, now we'd only have $400,000 available to borrow. Why would you do that? It's still $500,000, right? So I was doing it every day. I was borrowing and paying, and the bank thought it was quite normal because everybody else did that, right? They didn't care. It was fine. Did we pay them less interest? Yes, we did. Did they think we were better business people? Yes, they did. That's how the deal works, okay? So cash isn't the big deal, but not running out of it is really critical. What happens if you run out of cash? You can't pay your employees, you can't pay your taxes, right? You can't pay your creditors, you're past due on all your accounts, you pass your discounts, and you're setting yourself up for bankruptcy, right? So yes, I want to manage cash, right? So the statement has some validity for that, okay? But mostly it's for people who don't understand accruals and deferrals. And they do understand cash, and that's the danger. So I'd always be with my clients saying, nah, you don't really want just a cash flow statement. You want an income statement and a balance sheet, and let me show you how to use one. So because we can predict the future with those. I can't predict the future with a cash flow statement, right? Okay. So, and besides, you know how much you really made, obviously. Anyway, what's really nice of me, these are problems from a book you're going to have when you do Accounting 102. These are from an older edition, I suppose. 2002 is real old. Getting real old. These problems are from the Garrison book that you're going to get from managerial accounting, and you don't have that book yet, so I couldn't assign those. The reason I like these is they're full-blown problems that you do the entire statement. The ones in our book that I suggest you take a look at are just pieces of it, right? And they're still useful, you know, for you to work through and get an idea. But make sure you do these 2 problems and do them before I see you next time, okay? We are going to, see, next time we're going to finish cash flows. We'll actually work these 2 problems, crank through them, or at least one of them. Okay, and in a review session, we're going to have a review session when? It's Friday is going to be going over this Monday. I think we're reviewing for a quiz, right? And I think the review session is on that Monday too, is it? For you guys? Sound right? And then and we'll go through this stuff in the other chapter. Then we're going to do a quiz the day I get back. You get a vacation, right? No, I get a vacation. You don't. And you can get ready for this quiz. You can start getting ready for the test. You can start getting ready for the final. So take advantage of this. We're getting to the end here, you guys. And there's how many points left? 200 and 300 and... There's 200 for a final, 100 for a test, 20 and 30 for a quiz, right? So how many points are left? 3:30. How many are in the class? 650? Is that what it is? Yeah, something like that. Yeah. Oh, no, it's more than half of the class, is it? Whatever. Anyway, it's a big chunk, right? Lots of points left. So keep going, keep working. So take advantage of this opportunity. Anyway, oh, and then also, there's one more chapter after this one. It's all that's left. And it's financial statement analysis. There's a bunch of ratios in it. I'm going to actually expect you to know those ratios. So you might get that chapter read while I'm gone too. Why not? And we'll be ready to wrap things up. We're going to have a week getting ready for the final, right? Wouldn't it be nice if you did good on this quiz? Right? I know your other classes are really beating you up right now. So figure out how you're going to do this. Right? Wouldn't it be nice if you did well on this quiz, did well on this test, and then be in a good position to take the final and the other stuff. And if you're improving your grade still, which many of you are, right? Most of you are trying to improve it, right? Lots of points left, right? And you can really build it on the final. But get the points on the test too, right? So, okay. Anyway, what's really nice of me is I gave you the answer to these. There's the problem. There's the answer. Don't look at the answer until after you do the problem, okay? Don't do that to yourself. And so do all of them. Nice job putting them in there by Keith. I don't even know crooked. But you can print those out and use them. Okay? I want you to know those are there. Good stuff. Okay, good. Just close that thing. All right, so let's talk about the cash flow statement. This is really, really easy once you know what you're doing. It looks like it's magic until you do. So let's figure this out. Here's all a cash flow statement does, Nate. Cash. The cash account, right? You have a beginning balance in cash. You have an ending balance in cash. And you have cash receipts, and you have cash disbursements. I don't know if you really have to write that down, but you're welcome to. Is there anybody in the room that wasn't aware of that? General ledger of cash starts with beginning cash. You add all your debits, which are your cash receipts, cash coming in. You take out all your credits, which are cash disbursements, right? And you've got ending cash. Am I right? That's it. All this statement does is it writes down the beginning cash and the ending cash, computes the difference. That's the change in cash. That's what we're going to do. I'm not kidding, right? And then we're going to write down cash receipts and the cash disbursements. Only we're not going to do it directly. This is the indirect method. All we're going to do is this. Assets equal liabilities plus equity. Do that. Revenues less expenses is net income. You know that. What we're going to do is we're going to write down the change in every single asset, liability, equity, asset, liability, and equity account. We're going to write down the change in every single one of them, right? And then we're going to except for cash. And then we're going to add them all up. Okay, so think about this, because debits equal credits. If I wrote down the change, the increase or decrease in every single asset, and then I wrote down the change in every single liability, and then I wrote down the change in every single equity, and then I added them all up, what would I get? What would the total be? The only account I didn't write down is cash, you guys, in the general ledger. The only one. Revenue expenses are included in retained earnings, right? Okay. So what do you think? What's going to be left? Debits equal credits. I wrote down every single asset except for cash, the change. I wrote down every single liability, every single equity. I think what's left is the change in cash. Of course, this statement works. You know what the answer is before you start doing the statement. It's really cool. This is really, really easy. Okay? So that's all I'm doing. That's it. That's it. I'm explaining where the cash came from and where it went by analyzing the balance sheet. Okay? It's just the changes in the accounts. Okay? And it gets a little more complex in terms of where you write things. But it just makes sense. Okay? All right. By the way, how many additional journal entries do you have to make to do a cash flow statement? You don't do this statement until after you have your balance sheet and your income statement done. And your equity statement, right? Your balance sheet done, income statement done, equity statement done. right? And now you're going to do this. How many additional journal entries do you need to make to do a cash flow statement? None. Zero. Zero entries. That's it. What's kind of nice about learning how to do this statement is it reinforces a bunch of the transactions that we were reporting as we went through gains and losses on the sales of equipment, building, and stuff like that, right? Gains and losses on sales of investments. We'll reinforce some of that stuff, and how all the accounts tie together is kind of nice. We'll look back at some journal entries. So it'll pull on all that stuff, but those are entries you already did, right? There are no new ones here, okay? So you got that idea, huh? None. Did the author say that even? No entries? Or you just realized it? Okay, good, cool, good. Okay, anyway, so here we go. Where do we put things on this statement? That's the really big thing. By the way, what do you want to put at the top of every single one of the statements? Very first thing, make sure you do this, because I'm going to give you points for it. What do you want way up at the top? Company name. You know, you might be working, if you're working in public accounting, you might have 50 clients that you work on a year, or 20, or more, you know, 100 maybe, depending on how big the client size you work on. You got the idea? So, yeah, I mean, a company name would be a good idea. You know what company it is. Even if you're working for a large corporation, they own a whole bunch of subsidiaries, right? Each one has a different name. Yeah, company name. Okay, and then what do we want to call it? Cash flow statement or statement of cash flows is just fine. Okay, make sure you call it what it is. Okay, cash flow statement. And is this for a specific date, like the balance sheet is? Because we never close all those asset, liability, equity accounts. So it's just as of date, the author says, but really we just put the date, right? December 31st or whatever the year end is. Okay, or is this for a year ended? Let me tell you this, we are going to start with the beginning cash and work our way down to the ending cash. What do you think it is? It's the analysis of what? The year. So what do we write? For the year ended. In fact, the only one where we put just a date for the year ended and whatever that date is. Okay, the only one where we put just the date is the balance sheet, right? You close all the rest expense accounts too. It's just for the year, right? You start over. Okay, and the equity statement's the beginning of the year to the end of the year. Everybody got it? That's all that is. Okay, and then we are going to have 3 categories on this, and what I would suggest to you is these categories are upside down. They're in the reverse order of what we do, and that's the way you can remember what order to put them in, because I don't think there's a logical way to remember. I guess we think operations are the most important, so operations come first. And maybe operating the business is most important. Cash flow from operations. Cash flow from operating activities is the first section that we read about, right? Okay? Then you go down about half the page, right? You get real mechanical about this, and you write down what? Investing. It happens to be second, and I'll show you how this is upside down in a minute. Investing activities, okay? And it'll help you remember the order of them, right? Investing activities. And then you go down at about a quarter of a page, right? You know, so you're down 3/4 of the page, and you put what? Financing. Those are the 3 sections, okay? And they need to be in that order. Yeah, it's upside down because the first thing you do is obtain your financing, and then you invest that financing, and then you run your business, which is operations. It's upside down. You're absolutely right. Okay, that makes sense? Okay? And what we're going to do is these 3 sections are going to add up to what? Seeing it's within these 3 sections, within operations, investing, and financing, I am going to write down the change in every single asset, liability, or equity account, except for cash. What's it going to total to? The change in cash. That's it. So what this is going to be is change, either increase or decrease, in cash, right? So I've got the change in cash. And then guess what? I'll add that to the beginning cash, and the change in cash added to the beginning cash will give me, guess what? Ending cash. I'm not kidding. So when I do this statement, what I can do is I could write down the ending cash, write down the beginning cash, take the difference between them, and write down the changing cash, couldn't I? Before I have anything else filled in. And I know what the answer to the problem is before I start. Don't you always love it? Remember math classes where they gave you the answer before you worked it? It's fun, isn't it? Yes, it is. It's better than not having the answer. Infinitely. I love this statement for that purpose. You know what I like about this statement is I don't have to think much. It's no big deal. I know what the answer is before I start. And then what I'm going to do is I'm going to discipline myself to write down the change in every balance sheet account except for cash, because I already wrote that one down, right? Okay? I'm going to write down the change in every balance sheet account except for cash once and only once. Where people screw up is they'll fail to write one of them down. Or they'll only write down part of the change in the account. Or they'll write it down twice. Got the idea? And that'll mess you up, because of course then it won't total to the change of cash. And you'll go crazy, okay? So, real frustrating. So get real methodical about this, okay? But it has some information on it, it's kind of nice, it's okay, right? It's not bad, it's a useful statement. Just nowhere near as useful as a balance sheet or income statement, okay? Anyway, so what goes where? That's the trick. Okay, he's right. Current assets are going to go under operations. That's true. I'm going to put my current assets under here. It's going to be the changes in them. Oh, why? That's it. That's just they do. Why?
So you didn't operate. Right?
Why do you have current assets? What are current assets?
Assets are used up in a year.
Yeah, well, give me some examples. Cash, so that's down here.
Accounts receivable.
Accounts receivable. Why do you have accounts receivable?
Someone pays you from operating.
Well, they don't pay you yet. They're going to pay you later. Why do you have accounts receivable? Because you want more sales. Nobody wants accounts receivable. You want more sales. You grant credit so people will buy more from you, right? The competitor offers credit and they have accounts receivable and you don't. They take your customers away, right? Their prices are the same as yours. So what do you do? Why do you have accounts receivable? To get your sales. It's part of operations. What's another current asset? Inventory. Why do you have inventory? Walmart has a lot of inventory. Do you think they really want inventory? Nope. What do they want? Your cash. They want to sell it to you. Get your cash. Right? They want the sales. You have inventory to get sales. It's part of operations. Got the idea? How about prepaids? All of you guys have prepaid insurance, don't you? You have to pay your insurance in your car in advance because they're powerful and you're not, right? You have no negotiating power. Okay, so you pay them in advance, they don't have insurance. Companies are in the same boat. They're paying the prepaids, or maybe if it's prepaid rent, they're paying the rent in advance to get a better deal, whatever, right? But yeah, you have prepaids. Why do you have prepaids? That's not an investment. What is it? Part of operations. You got the idea? Okay, so what else goes up there under operations? On the same train of thought, changes in what? Current liabilities. Huh? Why do we have current liabilities? Tell me what the current liabilities are. Accounts payable. I love accounts payable. I really do. They're wonderful. Large businesses have gotten better and better and better at using their accounts payable. I had a client. Why do I like accounts payable? I hate notes payable. I love accounts payable. Tell me the big difference. You can use this to make a lot of money in companies. Accounts payable. Why do I love accounts payable and I hate notes payable? I don't want to have any notes payable at all.
Accounts payable is usually paid in one time, but notes payable is paid in sessions.
So,
Notes payable.
I can wait to pay the notes payable longer than the accounts payable. That would make me like notes payable better, not make me like accounts payable better. What?
Interest rates.
Interest. Accounts payable are interest free. Interest free borrowing. I love it, right? And what about note payable? You have to pay interest. You borrowed money and signed a note, right? Oh. I had a client that they would buy inventory and they'd have 90 days to pay. 90 days. They would sell it, some of it for cash, the rest on account, and their terms were 30 days. They always got paid at least within the 30 days, right, from the time they sold it, and they had 90 days to pay for it. Is that a gold mine or what? Interest-free borrowing. They could use that cash the whole time, right? Everybody got the idea? They'd collect all that cash, and they didn't have to pay it out for a long time. They had no notes payable. They didn't need any. They had huge accounts payable. So are accounts payable a bad thing? No, unless what? You can't pay them. You run out of cash, it's a mess, right? What about accrued liability? So why do you have accounts payable? That's not financing for the non-current assets. What is it? It's financing for your inventory, typically, right? What's accrued liabilities? Salaries payable, rent payable. Why do you have that? Because you can. I can pay later, right? I can pay those salaries later. So I have salaries payable, interest-free borrowing from my employees, effectively. Taxes payable to the government, interest-free borrowing from the government. Got the idea? But why do I have them? I have the salaries payable because I have the people work for me, which is an operating expense, right? Part of my operations, isn't it? Okay, got the idea? So, the current assets and current liabilities are gonna be under operations. All right, well, good. He just took care of for us, that's nice. Current assets and current liabilities here. Well, while we're on the topic of operations, what else is probably operations? What comes as a result of operating your business? What do you get? Expenses and revenues. Yeah, it's these, right? Sure. All of those are operations, aren't they? Revenues and expenses, net income, therefore, net loss is a result of operating, isn't it? So it's operations. So the net income is going to go up here too. With net income, oh, by the way, it's always what happened to cash. With net income, do I have more or less cash? I made positive net income. If nothing else changes, pretend nothing else changes, right? All you got is cash revenues and cash expenses. Huh? So if I have a cash revenue, it's debit cash, credit revenue. If I have a cash expense, it's debit expense, credit cash. So you kind of pretend that. So any net income means what? I have more cash. Any net loss means what? I have less cash. So I put brackets around the net loss if I have it. Does that make sense? If you have a net loss, put brackets around it. If you have net income, obviously it's positive. Okay? Is that something? All right. And then we have the current assets and current liabilities are also part of operations. Okay? And we'll have a little bit more too as we go. All right, good. So that's going to pick up then. By the way, where does the net income go? Into retained earnings. So retained earnings is a little different. We'll get to that. We'll think about that a bit. Retained earnings is a little bit different. Okay? A little more complex. So what other kind of assets are there besides current assets? Non-current assets, obviously. Non-current assets, where would you put that? That is what you invest in, right? We're going to show both the increases and the decreases in the non-current assets here. Now, if I increase a non-current asset, I would debit land and say, or debit building, and I credit what? Pretend everything was for cash. Cash. So an increase in a non-current asset would be I have what? Less cash? Because remember, you're doing what happened to cash here, right? Okay. If I have less of a non-current asset, I must have sold it for cash. Okay, that's the way you think about it. And because they're really big, they're really material amounts, and there aren't very many of them, I don't buy a lot of buildings, right? I don't sell a lot of buildings. So I show both. I show both purchasing them and selling them. And they're big dollar amounts too. They're material. What does material mean? It would make a difference to a financial statement user and the decisions they make, right? Okay, that's it. Okay, so investing is all of the changes in the non-current assets, okay? Increases and decreases. But I show both. So I bought land and I sold land and show both, okay? Got it? All right. Okay, and then what next, I suppose, is left on the balance sheet? Non-current liabilities. Now, what is that? That is probably my major source for financing, one of my major sources. So increases and decreases in non-current liabilities is where I get the money that I'm going to invest in the non-current assets. Mortgages payable, bonds payable, that sort of thing, right? Long-term debt in general. So that would be what? If I have more of a long-term liability, do I have more or less cash? Right? Debit cash, credit notes payable, right? Everybody agree with me on that? Or debit cash, credit bonds payable. What if I pay off a bond payable? I have less cash, debit bonds payable, credit cash. So if you have more of a current liability, non-current liability, of course you have more cash. If you have less of a non-current liability, you paid it off with cash. That's pretty straightforward, isn't it? Now the other source of financing is equity, contributed capital, right? Okay? So under equity, we've got contributed capital and retained earnings. So what would happen is increases and decreases in contributed capital would show, right? And dividends. So including treasury stock. Treasury stock, as I paid out some, right? I have less cash, right? I bought back my stock, retired my stock. Issuing stock would be I have more cash, right? So any equity transactions other than net income are going to be under financing. Why are dividends under financing? Because it's not part of operations. It's not part of net income. It's after you made the profit, then you paid it out as a dividend, right? So the dividend would be part of financing. So we have to split that. So when you get down to retained earnings, the net income part of retained earnings goes under operations. The dividends part of retained earnings goes under financing. that make sense? So you gotta kind of keep that straight. After you work through a few of these, I think it'll make sense to you. I hope it does. Okay? That's sort of the picture, you guys. What have we covered? We've covered all the current assets, not current liabilities, all the net income, which is part of retained earnings. We've covered the non-current liabilities, and we've covered the dividends, and we've covered the contributed capital, right? Those are all under financing. Is there anything else in the balance sheet we haven't covered? The answer is no. So if you put the changes down in these places under operations, investing, and financing, and you get them all in there once and only once, of course it's going to total up the change in cash, right? It doesn't matter how many accounts there are. Can you imagine that we could program a computer to do this pretty easily? Yeah, and everybody does. Nobody does these by hand. Okay, but I want you to know what you're looking at when you look at the statement, so we want you to do a few of them by hand. Okay, does that make sense? Okay, we would, you know, in a little tiny company, I might do it by hand because it wouldn't be worth the trouble to program a computer, huh? Right? They only have a few accounts. But if I have thousands of accounts, have to summarize and do the balance sheet, do the income statement. We don't even do those by hand. The computer do those too, right? And then this would certainly just an analysis of the balance sheet. Pretty simple, right? It's not bad, is it? And I'm going to give you how many points for doing this? I mean, it's a whole statement. And all the rest of the class was doing a balance sheet and income statement, basically, right? It's a whole statement, right? So I'm giving you how many points out of this thing? 30 on a quiz? Which, you know what? The way things have been going, I've never seen, I don't think I've ever had this many drops as a percent of a class ever. But I know if I've had as strong a class as it was left. Either it's bizarre. I don't know what happened, but it's okay. It's fine. We've lost about 50% of students. Wow, I usually only lose about 35, 40%. Most of them are coming back, and they were real nice when they left, by the way. I got over my head. I need to come back. I didn't start. You know, I didn't work hard. Is anybody here that did this class before? Doing it again? None in this group. Oh, one. Okay. You're never coming back, are you? Yeah, you're gonna get this done. Yeah, you know, but that's typical, right? There'll be a bunch of them next time, and there are any other classes. Yeah, so that's cool. It's no big deal, right? By the way, if you ever get in trouble in the class, what do? Either drop it or do it again, right? You dropped, right? Oh, you kept going. Oh, geez, that's annoying. That's painful. Okay, all right. Yeah. Now you're back to prove the grade. Actually replaces the grade. Did you guys know that? A lot of you guys are freshmen. Did you know it replaces your grade if you retake a class? If you have, what do you have to have a lesson is C minus or less, right? C or less, C minus or less, something like that. You guys can look it up. So if you did wipe out the class sometime, you could actually retake it and replace your grade. The third time you take it, they average in 3 grades. Do not do that. You know, and get an F and an A, right? Those 3 don't average out very nicely. And you don't do that kind of thing. But I bet people actually do that, so don't do that. Anyway. So, all right. Anyway, so this is going to be what, 30 on a quiz, 20, 25 on a test, 20 on the final. Nice, huh? We're doing this one little problem. Okay? It's just not really a very big deal. There are some other things we're going to have to worry about. There's going to be non-operating items included in net income or net loss. And what that's going to be is we're going to add back depreciation. That's going to go in here. Add depreciation and amortization. What's the journal entry for depreciation? Debit depreciation expense, credit, not cash, credit what? Accumulated depreciation. So what does that do to cash? Nothing. So there's no cash effect. The cash effect is when you buy the asset or pay for it, right? Not as you depreciate it. So the net income's too low from a cash standpoint by the amount of the depreciation and amortization. So we add it back. And I'll go through this next time when we do these problems. Okay? All right. And then another one would be, I should have it here. Another one would be gains and losses on non-current assets and non-current liabilities. Do you have a gain or a loss on a non-current asset, selling it? Do you have a gain or a loss on refinancing debt? You know, on your remember the retirement of bonds, we could have a gain or a loss, right? Those types of things, we want to put the gains and losses on the non-current assets in here as part of the cash flow. The financing ones we want to put in here, right, on non-current liabilities. and they are already in the income statement up here, so what we do is we take them out. So it looks really funny. The gain, we are going to deduct from cash flows, and the loss, we're going to add back to cash flows from operations. It's not because they make that happen to cash flows, it's that the net income has it in there and should not, okay? So those are the areas that are going to drive you crazy when you start trying to do these problems, okay? So, do we have any questions? Yeah, go
And
ahead.
then even though it's a gain, say it's a gain on a non-current asset, you put it in operations?
Well, remember, it's already on the income statement, right?
Yep.
It's in the income statement. That gain would be increasing operating income, but it's not really from operations. So we subtract the gain, right, and move the gain effectively down under investment. If it's a loss, it's been subtracted under operations, right? But it's not operating, so we add it back, get back to operating cash flows. And then we take that loss and subtract it down under investment. We'll do one. It's hard to get your head around at first, okay? One other thing I did not mention. The changes in the current assets and the changes in the current liabilities are just the change. We don't show both the increase and decrease. Notice I said I'm going to show the increase and decreases down here for the investing activity. Increasing a non-current asset, land, building, equipment would be what? Using cash. We also show selling them, right? That would be generating cash. Debit cash, credit land, whatever it is, okay? So we show both because they're material, okay? Same with the financing. We show both the increases and the decreases, right? Under the current assets and current liabilities, we just show the change. And here's the reason. How many transactions are there? Say at UPS, how many transactions are there in accounts receivable? How many times they debit and credit accounts receivable? Oh my gosh, millions in a year, right? Hundreds of millions probably, okay? So what's the deal with that? There's lots of transactions and they're small. So we don't show that all the transactions like we would under land, building, or equipment, right? Where there are very few, or under equity, or long-term debt, where there are very few. There's small transactions, there's lots of them, so we just show the change. Got it? Just the change. So it's going to be real easy. We're just going to take the beginning balance and subtract it from the ending balance and write it down. Okay? But now what happens if I have an increase or decrease in a current asset or a current liability? If you have an increase in a current asset, I have more accounts receivable. What does that mean? I didn't collect some of my sales, right? So I have less cash. What if I have more inventory? We pretend everything was for cash. So what happened? I use cash buying the inventory. I have less cash. Got it? More prepaid. I have less cash. What if I have less of any of those things? I must have more cash. That's it. So if I have more of a current asset, that means I have what? Less cash. If I have, therefore, less of a current asset, you can just pretend like you bought it with cash and you sold it for cash, right? If I have less of a current asset, I didn't replace it, or I collected the receivable, didn't replace the inventory, or I collected the receivable, what would you say? More cash. That's it.
For current liabilities, if it's, you have more current liabilities, you have more cash.
You got it. Just the opposite. More current liability, it means I borrowed money, right? More accounts payable, I didn't pay my bill. More notes payable, I borrowed more cash. Got the idea? So if I would have more of a current liability, I have more cash. So it's just the opposite. Well, yeah, debits and credits are the opposite of each other is all that's happening. Just think of the journal entry you got it made on these. Okay? Less of a current liability, what'd you pay it with, you guys? Cash, so you have less cash. Ta-da. Make sense? Okay. Are we good? It all kind of makes sense, huh? So what's the process going to be? As soon as you look at a balance sheet, what do you want to do? Write the cash down, right? Put down the beginning cash, the ending cash, subtract it, and you got change in cash. Got those three lines. By the way, on a test, probably 1, 2, 3, 4, 5, 6 points out of 30. You gonna miss those points? I hope not. Right? Write it down. Okay? And then just keep going. Okay? Get in the right place. Okay? I won't be too tough about order within operations or within investing or within financing, right? But they'd be sort of in the order of the balance sheet. Okay, but you got to have them in the right place. Okay, got to know what goes where. All right, well let's go back now that I have more time and I close that thing down. Let's open it back up again. The other class, I showed them how to use Moodle, just in case you've never done that. That's a joke, right? It's really annoying when I do it on this computer though, because it makes me type in who I am. Because this computer doesn't know, even though I already told it who I am today. We have to say Bellarmine though. Because it doesn't know we're in Bellarmine either. It's kind of interesting. I know where I'm at. I have to tell them my secret password. All right, guys. Here we are. Counting 101, huh? Where this thing is buried, it's down under. Look at all those videos. Wow. Jeez. I gotta throw all those away. Yeah, they're all still out on YouTube. We were messing around last night and we had a beer with Dan Bauer, who's on sabbatical with Nadine. Yeah.
So this next quiz, which, one of those sample quiz, I think was it correspond to that?
Oh, probably 12 or 14.
Okay.
They changed the numbering. The appendix is now an appendix instead of chapter 13 or something.
Okay.
We'll open it up and look. It looks like. That's a good question. And then it's 10 to test 10 to 14, obviously. There's no chapter 14, but there's appendix E. So it's exactly the same material. I guess people complained. Oh. Where'd you go? The same. Well, they want the whole thing, don't they? They do what? It's still what? What's still open?
If you hit cancel, like the page is still open.
Which way did it hit cancel?
Cancel on there.
Oh, it is still there. Oh, you don't have to do it again.
Yeah,
Oh.
thank you.
Because I can't type that many letters to get them all right. It's not going to happen. Yeah. Actually, you guys notice I have text or type, like this. With a 10 key, I can use a hand and go lightning speed, right? And then numbers, the 10 key over here on the side. We don't use those little tiny phone calculators you guys have. We use real calculators. Keep your hand on it. But I never learned how to type. I was in, and I've done a dissertation too, like this. Yeah. Anyway, hundreds of pages. I can type as fast as I can think. Right? Anyway, and I know how to cut the paste. I'm really good at that stuff. But anyway, and besides, my wife helped an awful lot. Yeah, typing stuff for me. She's really good. But I took typing when I was a freshman in high school, and I was on the football team. And one of my fingernails got broke in practice. Got caught on a guy's jersey, and I ripped the fingernail way back, and it was all bloody and everything. And the typing class was during free period that I would have had otherwise. And it got blood all over the typewriter and all over the paper, and I was real slow and awful at it anyway. So I jerked the paper. This is before we had computers, of course. I jerked it out of the paper out, and I went and threw it in the trash can, and I left, and I never took typing again. And I rued the day. I should have learned how to type, right? Anyway, so now we don't call it typing; it's keyboarding, right?
Pretty sure it's still like.
So we should still talk.
So they don't do typing class though.
It's more of like just
You
kind
should
of
just teach yourself to do this. If you were young and smart. Yeah, anyway. Okay.
Because they have like a whole program over it's just typing like is a or just
Over and over and over, and you do it online. I could probably still learn how to type. Nah, I'm not gonna. If I didn't know how to ride a bike, I wouldn't learn now either. Yeah, okay, anyway. All right. So, here it is. Let's see what we got. There's the ones on doing avail for sale, trading securities, right, guys? It looks like that one's a, what is this? Yeah, that's probably, yeah, that's consolidation, elimination entry. The first one, by the way, what is this thing? What do you think? They own, how many shares they own? Out of how many? A million? What do you think that is? No control. You bet. How long are you gonna hold it?
1 to 2 months, so
Now, what is this thing?
short term.
Available for sale, probably. Yeah, I don't know, yeah. Okay, is that available for sale, or is that one trading?
I think
1 to 2 months?
It's only like a few days.
Yeah,
to,
it's probably a trading security, though. That's, yeah, let's see what else I gave them. Probably, yeah, I guess I'd have to take on that one, I don't know, I'd have to take, that was an available for sale short term, wouldn't I? And a trading security might be okay too, I should have made it a little longer than that. Okay, anyway, here's a 40% interest, what's this thing? 40% interest in the company, what do you think that thing is? Well, subsidiaries if I own more. The subsidiary was up there where they owned 70%, what's this thing?
Investment affiliates.
Investment affiliate, yeah, so that's gonna be that equity method thing, right? Man, everything's here, isn't it? And then here's a bunch of stuff, this is similar to what's gonna be on the test, or I'm sorry, yeah, on the test and on the final, I'll give you a bunch of ratios. So here's some information in doing ratios. This is from the last chapter that you're gonna read, so be sure and do that. And so you can practice those things too, that'd be a good thing to do. Oh, and then this was a cash flow problem, okay, which is not there, but I gave you the other two to study from, okay? So, yeah, it is out here. That'll be fun. Okay, well, anyway. So what I wanted to do was open this up and point out, this is what a balance sheet looks like. That's funny. And here's what an income statement looks like. But remember on the income statement, you have this gains and losses. Those things you were talking, that we were just talking about. So the gain on the sale of investments, that's a non-current asset. That gain is going to have to be subtracted out from operations, right? And then we'll handle that sale of investments down under investing activity. Make sense? Okay, so that's a non-current asset. Same with the loss on the sale of equipment, that you'll add back the loss. And then you'll handle this down under handling property, plant, and equipment, right? Okay, and you're going to handle depreciation under there too, which is going to be added back up at the top. So that's going to make it more difficult. So give these problems a try. Give both of them a try. Get all through whatever you can, okay? And then you can look at the answers and see how your answers differ from theirs. And then we'll do both of those hopefully in class next time, or at least we'll do one in the class and one in the review session. You guys got it? And you can go away, but I don't let you leave 2 minutes early because we messed around on the quiz. The other group got out 3 minutes early. Don't tell my chair, they'll duck the pay. You guys. Study, study, study. Seriously,